JK Lakshmi Cement has come out with its quarterly numbers with margins increasing by more than 450 basis points to 15.1%. Joining us is the company's whole-time director, Mr. Shailendra Chouksey. So if you could tell us the volume, what the numbers were during this quarter and how much it has risen on a year-on-year basis.
Well, on the volume front, we don't have much of a story. In fact, our production is down by about 6% at 21.07 lakh tons, while in terms of sales at 23.27 lakh tons, it is almost flat compared to the corresponding quarter of the last year. However, if I compare with the previous quarter, then the numbers are an improvement of nearly 12% over the previous quarter.
And what is the volume outlook looking like, going ahead into FY21?
Well, going forward in the FY21, we are quite bullish. We expect things should be much better. With the rural economy doing better on the back of a good monsoon in this year, and also on the expected announcement by the government in the budget to capture the infra spend of 102 lakh crore that the finance minister has talked about. I think there will be a significant improvement in the total outlay on the infra various components in the budget this year.
Well, sir,
and I think that should augur well for the cement industry.
Okay. So your EBITDA has actually increased, due to the logistic costs, and also there was a change in the product mix. Could you quantify the cost reduction and talk about the change in the product mix? What we can expect, for the fourth quarter FY20?
There has been a significant improvement in our logistic cost in terms of our efficiency that we have been able to bring about. And also with the help of some improvement in the prices, we have been able to improve our EBITDA considerably in this year, in this particular quarter. And going forward, I think these factors will continue. We don't see any reason for prices to take a dip, or we don't see any reason why our efforts to continuously improve our efficiency would be slackened. So I think the only thing positive will happen is the volume, which we saw a dip in production this year, in this quarter. So I think going forward that should improve, and therefore when the multiplying factor improves, there should be a much better number going forward. That is what our expectations are.
And what do you intend to utilize the funds, which will be raised via ECBs? That's roughly almost, the board has actually given the approval of almost $25 million.
I think we have just completed our last bit of project that we had undertaken for our capacity growth with the commissioning of our Cuttack grinding unit, which we did in the month of November. I think the way that we need to deploy the funds that we generate, apart from repayment of the debts that we have taken, I think it's time that we draw out our plans to increase our capacity further. And that is where we would like to conserve our cash flows for.
And how is the pricing power looking like in the northern regions? The channel check suggests that 2 price hikes of rupees 10 per bag have been already undertaken this month.
Well, I don't know about the 2 hikes, but I do know that there is an improvement in the prices compared to the corresponding quarter last year, which were at very, very low level. In terms of so I expect that price to continue, and that should support our buoyancy for coming time.
So overall, how has the demand been in the region overall, and any kind of green shoots are visible right now?
Well, the demand in the overall has not been very optimistic, and has been at a low key, keeping in line with the economic situation that we witnessed in the first 9 months of the year. So I think cement could not have been otherwise. And that's why we have noticed almost either a flat growth or a degrowth in most of our markets. But going forward, we are much more buoyant. As I mentioned, that the monsoons have been fairly good in wherever we operate, and therefore the rural economy and the overall economy, there should be things should be looking up, which should result in much better growth in cement consumption.
How much has the debt come down to, and can you quantify the growth capital, that you will be spending, in the second half of FY21?
You see, our debts have come down to about 1,600 crores currently, which takes our debt equity to a very healthy level of about 0.9 and on a net debt basis about 0.7. We have a repayment plan of about 250 to 300 crore every year, which will be done this year also. Apart from that, there is no other project which is right now under commissioning. We are only one project which is left is the completion of the waste heat recovery project, the second one that we are trying to put up at Saruhi, which should get completed by July this year. Thereafter, we have no plans as far as no project in progress thereafter.
All right, sir, we'll leave it till there. Thanks for talking to BloombergQuint.